Good morning, traders. Steve Ganz here, sharing an adjustment in a start-to-finish trade that I opened up earlier this week. As you recall, I sent out a video where I opened up a SPY put credit spread, or also known as a bull put spread. The premise behind this is when the market had sold off a little bit, I sold this 495 put when I could get some nice premium for it. I bought the 490 as my protection to limit my downside risk or cap my downside risk. Now, the premise here was on this sell-off day that the market would in fact rebound because we pulled back right here to what I deemed was a potential support level around the 490 mark. So based on that, I was comfortable selling a put in this general range. So our market was right down around in here at the time I sold that. Market has since rebounded. This position is currently at a profit of $113. The max potential profit on it is $142. It's currently Thursday morning. This expires tomorrow on Friday. So I've got a couple different things I might consider with this trade. One of them is take the trade off. It's up nicely at this point, got nice profit in it. So that's one possibility. Just go ahead, pop that trade off, lock in my profits. Another one is I can let it expire. Right now it's at $112 in profit. I can let this thing go through the end of the day tomorrow and potentially capture some more profit out of this trade. But let me show you one other potential opportunity here. If I had an opinion that our market is unlikely to break to new highs here, let's say above the 502 or 503 mark by the end of the day tomorrow, if I think that's unlikely, I may want to come in and sell now a call spread above the current market. So I would come in, I would sell a call. 500 might be a little tight, maybe sell it at 502. Of course, I don't want unlimited upside risk, so I need to buy protection there as well. So I would come back in and buy a call and probably buy that call maybe around 504, somewhere in that general vicinity. Now, by doing this, you can see I've created what's known as an iron condor, but it's a little bit of a skewed iron condor. It's skewed because here on the downside, I have 5 points in risk. Here on the upside, I only have 2. That creates this, more risk to the downside sort of condor and virtually no risk to the upside. I do still have some risk. If we go all the way to expiration and the market runs up considerably, I could lose $14 on this trade. But in exchange for adding this, I'm selling this 502 for $75. I'm buying the 504 for $31. So that's adding in about $40 or so in additional profit potential into this trade. And of course, the nice thing about OptionStrat, I can come in and I can say, you know what, I don't think the market's going above 501 or 500. So I could maybe come in and sell this all the way down here. You can see I significantly boosted my profit potential. But in exchange for that, I took on more upside risk. Or I can tighten this up like that. That might be a good possibility on this trade. So you can see here, I've removed all upside risk. I have no upside risk. If the market were to rip up, I will still lock in $20 in profit. So we can play all the what ifs here, move this around to what I am comfortable with in my particular premise. And I kind of like, this premise right here. And I can come look at my, previous trade. This is my previous trade. I'm looking at a max profit of 142, max loss 358. I can look at, well, what if I go ahead and sell that call spread? Now my max profit is 203. My max loss is 297. It's less because I'm taking in some additional premium here. So I'm actually going to go ahead and make this move right here. So I'm going to save the trade. And I will overwrite the existing trade in this case, and I'll just make a note here that I added call spread to juice the trade. And then I can now either choose to just ride this thing to expiration tomorrow and let these options all expire out of the money, assuming that we expire in this window between 495 and 501. Or at some point tomorrow or whatever, I could go ahead and pull this trade off if I wanted. So that's kind of where we're at on this. Again, just a way to adjust a potential trade or work your way into a trade. Start with one thing, and then as the opportunity presents itself, build it out into something a little bit different. So thanks so much, everyone. Take care.